Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup, Friday, November 21st, 2025. Ron Quaranta here with my dear friend David Brill and our special guest, the one, the only Adam Goldberg. We may have Josh joining us, gents. I am not sure yet, but if she does, we will be here. For everyone who's joining us live on LinkedIn Live or on X or on YouTube, thank you so much for joining us. If you have questions for David or Adam or I, please put them in the chat. Please do remember that nothing discussed really is business, investment, or legal advice, and that the opinions expressed are really our own and don't necessarily represent the opinions of our firms. David, it's getting pretty crazy out there. For everyone in the audience who does know and watches, you and I text regularly. I've got to stop saying WTF on text messages to you in the market. Bitcoin down almost 4% today. David, we talked about market action yesterday, and the word that keeps popping up for me is massive deleveraging. What are you seeing?
No, I think that's absolutely right. And what's interesting is we're seeing liquidations both on the short and on the long side. So I think people are really trying to use leverage and position as we, continue to move. I mean, what I'm seeing is I continue to see that we're in a downtrend. There's some technical levels that we're bumping up against and hitting against, and we can talk about it at a higher level. But look, I mean, there's two ways to look at it. If you believe in the 4-year cycle, we're seeing it early, and people are jumping the 4-year cycle and selling early. Two, we're getting an early Black Friday sale with crypto first, and then we may see the market sell off after this. So you got your 30% off. When we're down in the 80K range. And three, the most likely is that we're still seeing deleveraging from that big sell-off on October 10th and the fallout from market makers and other players having to sell.
David,
digital asset companies having to sell.
Right. David, for the audience, the 4-year cycle you're talking about is pegged to the halving of Bitcoin, and we've been seeing pretty steadily the trend of the 4-year cycle. Adam, I wanted to pull you into this real quickly, and David and I are going to kind of deep dive on some of the market macros. You joined us for our crypto asset working group meeting yesterday, and David, you and I were talking about this in the virtual green room earlier. There's this interesting dynamic, Adam. It looks like we've got real progress happening in DC, or at least open discussions about the regulatory and legislative landscape for crypto. However, the crypto market's falling apart. What are your thoughts about what's the impact of what's going on in DC on the crypto market, and what are the timelines around what may or may not happen as we hit holiday season?
Yeah, so I think it's kind of twofold. So I think what we've seen is the market has not really traded much on news in Washington unless we're nearing a bill. So you saw it with Genius. You saw some positive developments in the market rally, but the market didn't really rally until it was set in stone that Genius was going to pass. Yep. So I think that's probably what you're seeing right now. Is I think there is very good positive momentum in Washington, and we probably are closer to a market structure bill than maybe we've ever been, because we've at least the thing to understand is kind of the way the process works is there's two committees of jurisdiction in the Senate that are the most important. There's the Senate Banking Committee and there's the Senate Agriculture Committee. Senate Agriculture Committee controls the budget for the CFTC, and the Senate Banking Committee controls the budget for the SEC. And so you do need both of them to pass bipartisan versions of the bill and then mark them up, and then one combined bill will move to the floor. We did see a couple weeks ago that the Ag Committee did release a bipartisan draft. Right now, we are waiting for the Senate Banking Committee, which has released 2 Republican GOP drafts, to release a bipartisan version of their draft. But if that were to happen in the next 2 weeks, you could potentially see a markup in early December. And if both committees were able to mark up the bills, then that would set it for passage either right before the end of the year or potentially very soon thereafter. But that would be the most likely passage, is right before the end of the year if we're able to get there.
Adam, appreciate that. And one of the other conversations we've been having, and David, I hate to do this because I feel like everything now is the wager and everyone's looking at everything through the lens of Polymarket or Kalshi, for example. But Adam, we had a conversation with some colleagues yesterday, and we raised the idea that there might be legislation passed before the end of the year. And laughed out of the room. No one believed it was going to happen. So I don't need percentages, Adam, but if we don't make it through the end of the year with proper legislation here from market structure perspective, is it Q1? And if it's not Q1, is it done because of the election coming up?
I have been always of the view that you need to pass a bill before the end of the year to get it passed. And the reason for that is it's kind of twofold. As you noted, the biggest reason is that if we push into next year, it's an election year. And if you've looked at the polls or you looked at the performance of the Democrats in the November election we just had, they're going to start measuring the drapes and start anticipating that they will take control of the House and potentially the Senate. We saw this particularly with the stablecoin bill. If you remember, when there was a lot of positive momentum on the stablecoin bill, and it's going to pass in the spring or the summer when the Democrats were in control. And then as it looked more and more likely that the Republicans would win the election and gain control, all of that momentum stopped. And we didn't get a bill till Republicans had unified control almost a year later. So that is the biggest risk if it slips into next year, is kind of the Democrats and the Republicans fall back into their traditional election mode. They don't want to do a bipartisan bill. They don't want to get together. A major selling point for trying to get it done by the end of the year is congressmen and senators love going home and telling people how bipartisan they are and how great they work with their colleagues as they're running for re-election. They obviously want to fight with the Democrat they're running against, but they want to present themselves as reasonable, bipartisan, doing stuff for their constituents. Passing a bipartisan bill such as crypto market structure, which affects their constituents, which their constituents care about, and which can show them with an overwhelming bipartisan vote. Let's say it's similar to Genius with almost 300 plus votes in the House and almost 70 votes in the Senate. That's a good thing to go home and sell for the re-election. So those are the incentives to get it done now. I've always been of the view that if it slips into the election year, you likely don't get it. You would have to be within like a week or two of coming back. But if it starts to, if anyone telling you spring, that's no bill.
Right. Adam, thanks so much. David, I always learn more about the sausage making in DC every time we talk to Adam. I want to pause for a second and welcome our dear friend, Josh Klayman, always the trooper on location somewhere. Josh, how are you?
I'm great. How are you guys?
We are doing well. Adam, David, Josh, I wanted to segue to something else interesting. And again, for everyone in the audience, you know that Josh and David and I text probably more than we ever should. David, you remember the message I had sent you? There was this article on, I forgot who the commentary came from. I think it might have been from former CFTC Chair Mossad, who said the answer is combine the SEC and the CFTC. And I distinctly remember being on a call, David, with you and Adam, and the answer I got was that's never, ever, ever going to happen. David, is that the answer?
For crypto, having some combination would be the answer. But for the broader markets on the whole, it just still seems like a far away idea. There's so many entrenched interests in having these separate, and different groups have, real control or sway over those agencies. So I will say this, for crypto, it would make sense, and it probably would make legislating much easier. But I just don't see combining the two for the overall, markets on a broader level. Unless Adam is totally going to disagree with me.
No, I would say
strongly in my view.
The reason for that most people don't understand or know is it really has nothing to do with kind of if it would be sensible from a regulatory perspective. Mostly every global regulator both regulates derivatives and securities under a single markets regulator. The US is unique in our model, and one of the reasons for that is it simply goes down to jurisdiction in the Senate, which is what I mentioned earlier. The CFTC, which started as a commodities regulator, is under the Senate Agriculture Committee. And if you're the chairman of the Senate Agriculture Committee, you get money from all of the big agriculture interests and all of the big financial interests. If you had a combined regulator, that would likely sit under the Banking Committee, and the CFTC the Ag Committee would lose clout, influence, and most of all those critical campaign donations that they get. You will never find a chairman of the Senate Agriculture Committee that is ever going to give up their jurisdiction over the CFTC. It just won't happen, and that's the reason. Josh, go ahead.
So I'm chomping at the bit. So one person I had heard suggesting this a while back during some of our PLI sessions over the years was Nancy Wojcik, Cooley, right? She had often, said that this would be a good solution, just having a single regulator. It does. I agree with what David and Adam are saying. They are far more knowledgeable about that stuff than I am. I will say, though, that with our, hopefully incoming chair of the CFTC, Mike Selig, he clearly has been working very closely with Paul Atkins, the chair of the SEC, right? And just like we have this kind of virtuous cycle or virtuous circle of the relationship between Paul Atkins and Hester Peirce and is it Mark Uyeda? I'm blanking on the other, who used to work with and for Paul Atkins. I think the fact that, Mike Selig is likely to be our next CFTC chair actually bodes very well for the two agencies working together. Although certainly Caroline Pham certainly has been aligned with Paul Atkins and working very closely. So not taking anything from that, but it's almost like, the SEC got their, if the SEC were going to pick a chair of the CFTC, maybe they got their pick,
Yeah. No, Josh, really good point. And Adam, it brings me to something else that I wanted to talk a little bit about. And again, this won't be a bash the prior heads of the SEC conversation, but it strikes me as the SEC and CFTC are collaborating in a much deeper way than at least I remember seeing anytime recently. Adam, would you say that's true?
Yes, definitely. I think there has been a huge effort in this administration to have the CFTC and SEC coordinate. I think it's particularly true for crypto since there's such a kind of unique combined structure you kind of need on both sides, where the essential commodity parts or the spot market are regulated by the CFTC, but other components around capital raising and securities formation and investment contracts might be regulated by the SEC. And you have seen a kind of an unprecedented level of coordination. I don't think they had their first combined roundtable they'd had in over a decade this year. And as Josh correctly notes, if Mike Selig is confirmed, the fact that he was the chief counsel of the SEC Crypto Task Force means you will likely have a lot of alignment on that perspective.
Adam, let me stay with you and pull Josh and David into this as well. The other thing I want to add to this, and I didn't see all of it, I did read some of the transcripts, was the confirmation hearings for Selig. And if I remember, some of the questions really circulated around the idea, does the CFTC have enough money to do the mission that they have? Again, without getting into the politics of it, is it that simple? Allocate more money for the CFTC to have the tools that they need to help police the portions of crypto that they would police?
So there was two features of the bill. One, it was a massive funding increase for the CFTC because basically they're going to get, in the formulation of the Senate Agriculture Committee, which again I chuckle, is the Senate Agriculture Committee is giving more budget and clout to the regulator that it regulates and rolls up to its committee. So shouldn't be super surprised there, but it does contemplate that there's all these new classes of registered entities, which would be these digital commodity exchanges, digital commodity dealers, digital commodity qualified custodians. And if you did have these different class of entities, they would all be charged some kind of surcharge for being registered with the CFTC, and then that would flow back to allow the CFTC to have an enforcement staff. So one thing people don't really know is, from an enforcement perspective, the CFTC staff is very small. They really only focus on fraud because that's kind of their mandate, prevent market manipulation and fraud. They don't do examinations of their member firms. They rely on an SRO named the National Futures Association, the NFA, that actually is in charge, like FINRA, of different member entities that are registered, and they're the ones that do the examinations. That is a market difference from the SEC, which both has an examination staff. If you're SEC registered, you have an SEC examiner, you also deal with FINRA. So the contemplation here would that the CFTC would need its own equivalent, have its own examination staff, its own staff to look at corporate formation documents for if people wanted to register for these new classes of entities. There are all these different things that they would need to do, and they would need money for.
Josh, David, I feel like Adam just queued up our next webinar. So you want to be a DCM? It's definitely something we need to talk about. Josh, you want to weigh in on that a little bit? Not the webinar.
I mean, it all makes sense to me what Adam is saying. I do wonder whether there is a possibility of getting more close real estate wise. I know that in a talk that Commissioner Peirce gave at an event that I was in attendance at in Chicago, she had kind of talked about the idea, oh, it'd be so great if the CFTC were closer and we could just informally grab lunch. or, things like that, instead of having it be geographically, further located. Now, I don't know whether that was just like, oh, would be great, or what, but I did think that was an interesting sort of comment. It was from a few months ago now, a couple months ago now. But I mean, Adam, David, Ron, is that a possibility? Could we have distinct regulators, but maybe move some staff over to a different building, or is that a non-starter? I don't really even know.
I feel like that's a Doge, not the crypto coin conversation. But David, tell me if you disagree.
Look, in an ideal world, there's a lot of great coordination, and we should have some cross-pollination between the agencies. Maybe Adam knows a little more if that's actually going to happen, but I mean, I certainly would support it. Look,
he looks suspect of the whole.
I know. Look, ultimately,
and it may have just been like a nice comment.
Well, the administration could coordinate, which I think is what is happening. Whether or not there will be a formal law that says that these regulators must combine, that's the thing you'll never see happen. That's not to say that the Trump administration, inside the Trump administration, cannot say SEC Chair Atkins work with CFTC Chair Sillig, get combined rulemaking, give combined guidance. I think a big frustration for everyone in the industry post-Dodd-Frank is you had the SEC doing their security-based swap rules that took a decade. You had the CFTC under Gensler moving forward with the swap framework under Title VII years earlier, and you would get different guidance from both regulators on what was a swap, what was a security-based swap. You would have to go to one, you'd have to go to the other, and that was mimicked in crypto, where if the SEC under Gensler thought it was a security, you had to go to Gensler, but then other people would say it's a commodity, so you'd have to go to the CFTC. I think everyone just wants clear rules of the road. Is I know it's this, I go here. I know it's this, I go there.
Adam, Josh, good points. David, I've got to go back to some of the market stuff. Adam said clear rules of the road. I want to talk about the markets. There's nothing clear about the economic data that you and I are seeing that Josh gets stuck getting text messages about. David, we saw the jobs data yesterday that blew through some of the numbers, which didn't seem to help the case for an interest rate cut. But what do you make of the data? We're missing data because of the government shutdown. I still say it, and we talked about it yesterday, David, it's not the data, it's the revisions. Do you still agree with that?
Yeah, I totally agree with that. And I would be super curious to see what the revisions will be from that last data report. It's really hard to reconcile with what people are seeing in the overall job market or what they're talking about seeing in that latest jobs report. So, I just saw a lot of people on Bloomberg shaking their heads. So, look, in one sense, it is good. If we are creating more jobs and they're being filled, that's absolutely a positive. But if that is the case, that's absolutely bearish for people who want more rate cuts. So, I think it's just creating a lot of uncertainty in whether we'll see a rate cut. And, and I think there's also an issue where there's not going to be other data before the next, Fed meeting. So, how are you going to be data dependent when you don't really have a lot of data to depend on?
David, I made the mistake. Well, not the mistake. I recently did something I never thought I'd do. David, Josh, you'll appreciate this given all of the messaging that we do. I failed to shut off alerts for Asia trading overnight in crypto, and now I regret it. David, when we talk about the interest rate landscape, and I think all of us here on the call agree, it's really been a risk off almost across the board, with the exception of gold. David, we heard recently, and Adam, thank you for correcting me, Governor Williams in New York talking about, or at least alluding to the possibility of an interest rate cut. David, my theory is, and I'd love Josh and Adam to tell me if they agree or disagree, I'm not sure if one cut on December 10th will make a difference with this market. Do you agree?
I agree, but it feels like everybody had baked in a cut. So now that there's uncertainty and they may not cut, and you know how the market feels about uncertainty. I just think there's this sort of like under the surface, people are getting concerned about like AI companies have grown so much. There's been a lot of talk about these deals that are being done and their circular financing. And I talked to somebody I know very well. His name is Russell Perlman, and he was telling me about, Oracle has 18 or $20 billion of debt. And now, some people are buying credit default swaps on Oracle debt. And this is very reminiscent, to hedge your AI exposure, and this is very reminiscent of, 2007, 2008.
Yeah.
So, you just sort of see these signs, you connect the dots a little bit. So I do think there's some worry in the market, and we're seeing it play out.
David, I am never comfortable or happy when I see CDSs being a broader part of the market conversation. Josh, go ahead.
Yeah, I agree with you guys. And also, I think it's interesting, so many people, including us, were waiting on the NVIDIA earnings, to see like, what does that mean for the future of AI? Because of course, the Google CEO had been saying, fears of AI bubbles, things like that, and others, not just that person. And yet, the earnings report, it beat, right? So it was good, right? And then we saw a bounce, and then we've seen a retreat with new fears of an AI bubble.
Yeah.
I guess, some people are saying that that's being echoed in what we're seeing with the Bitcoin price as well. Although, certainly we've seen some tweets and posts and other things about what could be behind that as well. But before we get to that, what do you guys think? Like, why after the earnings released by NVIDIA, which people were waiting for, why was there suddenly this pressure on a whole bunch of other tech stocks? Is it the Oracle debt piece or is it something else, do you think?
And before we answer that, Josh, and I've got some thoughts. David, I've got to say it, and I've got to say it for the audience. What have we done to Josh that she actually texts us waiting for the NVIDIA earnings report coming out on a Thursday afternoon? No, Josh,
You
it's a really
transformed me.
You're taking her to the dark side, Ron.
I am so sorry, old friend. I mean, David, I want to kick that off, and I think Josh raises a good point. Adam would love your perspectives as well. Look, I mean, David, there is a lot of conversation by people saying, well, it's not a hype cycle in AI, but let's be honest, 55% margins year over year for a $4+ trillion company in the aggregate, David, put on our macroeconomic hats, that's not sustainable perpetually, particularly given some of the deals that we're seeing being signed in AI. And we're seeing $100 billion in investments being planned. I don't see that cycle being able to perpetuate. Nothing goes up forever. And I think when you see this kind of inflation bubble that quickly, it raises some of those concerns. Would you agree with that?
Yeah, yes, I do agree with it. I do think that we need to see more monetization of AI.
Yeah.
And see people really, I don't want to say people, but if we can really see more monetization and growth from that, I mean, I think a lot of people still can use AI, go on to different platforms and not pay for it. I mean, like my company has an arrangement with a provider and we use it within a walled garden, but I think a lot of people are still able to use it for free. And I think the cost of the electricity or the data centers to run these searches is expensive. So I wonder at some point if there's going to be no more free lunch a little bit on that, and we're going to see more monetization. I just think that one thing people were pointing to, is that there was a big sort of difference between what the revenue is being reported and sort of the time for payment for what video was receiving and making, well, are all their customers going to be able to pay for it? Are some of these customers going to have cash flow issues? And even though they're popular companies, they may not be cash flow positive in a way to pay for all of these. So I think there was some of that going on. And I think there's some profit taking going on. Look, I think November, late November, early December, you see a lot of repositioning in people's portfolios.
Yeah, fair.
And some people, look, they might have had these big gains in crypto and other, and some of these tech stocks, and they might be taking, profits early and, not wanting to give anything away after Thanksgiving or in December.
David, good point. Adam, I've got to imagine the Goldberg family office has lightened the load on its AI holdings, no?
Well, it's funny because, so obviously the market seems to have been spooked by Michael Burry, which if people don't know from the financial crisis, he was the one that basically found the needle in the haystack that said the entire subprime mortgage crisis was going to basically happen. And he was the one that flagged these concerns about the overspending in AI and how circular it was. The interesting thing from what David said is actually companies that are investing AI are actually making incredible amounts of money, at least the big hyperscalers. They want as much NVIDIA chips as they can get because their order books are so filled. They're oversubscribed with the services they can sell as immediately when they can get more GPUs. So there are, and obviously NVIDIA is, I think at this point, the most profitable company in the history of the world if their earnings keep going up as they're going. So I think there is a lot of money being made. I think the thing that was the most interesting, at least for our sector, is yesterday is a pattern that I don't think we've seen much is the market was up on NVIDIA earnings.
Yep.
The market was up in the pre-morning and everything was looking good. And then Bitcoin rolled over. And that is when the market started to turn down. So this is one of the rare times where Bitcoin and the crypto led the market down because now there's so many companies investing in it. And there's so many of these digital asset treasury companies and others that are taking huge valuation losses. And so that's putting a lot of pressure on the market. And I think probably all of us have been seeing kind of what's been going on at Binance, which is getting a lot of attention. It seems there is someone that is putting in an automatic massive sell orders every morning, which seems to indicate that a big firm is deleveraging significantly and may be insolvent. I think we'll probably find that out. But in the past, when we've seen these kind of forced buying pressure on Binance, that usually is an indication that someone in the industry is liquidating through Binance.
Yeah. Adam,
and
it's
putting a lot of pressure.
Adam, it's a good point. I appreciate that. David, let's get to that. If we're going to have that conversation then, and we've seen a lot of the posts, and Josh obviously weigh in as well, is it a coordinated action from some really big names that remain unknown? I tend not to go down the rabbit hole of, oh, it's one or two big players that are kind of crushing the market, but maybe I'm wrong.
I would like to think it's someone being forced to sell, and it's not like a coordinated effort to bring the market price down.
Yeah.
I just think there are too many buyers right now to like coordinatedly bring the price down, in a way that's not reflective of the market. Another thing I wanted to mention, Josh, actually the company that's more profitable than NVIDIA is probably Tether.
Yeah. Go ahead, Josh.
Yeah, sorry. And I didn't mean to talk over you, David, or start to talk over you or make a face like I was going to talk over you, which is, people are pointing, including on an X post that you guys referred me to, that, this could be traced back potentially, who knows, but to the auto liquidation event that happened, over a month ago now. And I do wonder whether that is the case. One question I do have, though, if someone is going to liquidate and they're having pressure, why are they selling on exchange and not OTC? Why would they be selling in a way that's going to move the market? Are there reasons why they have to do that, do you think? Or is there, I'm just trying to think of like, when I think back to say Mt. Gox, right? way back. And like people asking like, well, why is the trustee selling on exchange? And the reason I think was that it had to be a public sale, right? I think that was, but you could actually see, if you guys recall, which I'm sure you do, when the trustee would sell, it would move the market.
Yeah.
So I do wonder that one about the OTC, and if there's a reason why they have to sell on Binance as opposed to in some other less transparent way. And then also, what to make of the 4-year cycle, which people have said has gone away, right? And yet some people had pointed, some folks we know pretty well had said, maybe we're going to see a dip at the end of the year and the beginning of the first quarter of next year. So I do wonder. I also, my last thought on this is just when we see what's happening with strategy, right? And these articles about, I think that the stock price had been down something like 56% or 50 something percent versus, the actual price of Bitcoin being less so. But because of the leverage, people calling into question whether the strategy of investing in strategy is the right strategy.
Josh, David, Josh just gave us the next hour of conversation. I don't even know where to begin. But David, if we go back to the kind of liquidations that kind of need to happen for these firms not doing them on OTC desk, you could make an argument, given the size and volume and liquidity differences between now and Mt. Gox, there may not be enough liquidity at the OTC desk to be able to handle the offload they need to do to disseminate that out quickly. I mean, I'm probably oversimplifying it, David, but there's only so many phone calls you and I could make to a bunch of market makers saying, hey, I've got to liquidate 2 billion, hurry up.
Yeah, there may just not be enough buying, like Ron said, like enough on the other side of it. I wonder though, like selling at the same time every day, that doesn't really seem like to be the most practical way to reduce your holdings and get the best price. Not, look, I'm not being hired to that, but it just seems like there might be a more cash efficient and revenue efficient way to do that.
Yep.
No, it does look like every time sort of Asia's moving one way, and then there's this big selling pressure in the morning the other way. Look, the positive news is this won't last forever. I think
Yep.
Tom Lee said in his interview last year it took about 8 weeks for the washout from FTX, and we're about 6 weeks in right now from October 10th, give or take. So maybe we have a couple more weeks of this to go. But I keep hearing persistent comments that there are market makers that really got flushed in that October 10th, sell-off. So I think we just have to be, mindful of that and see who they are. I don't want to speculate on the names I've heard. I don't think that's really helpful.
It wasn't the Ron Q family office, I promise you, David. And Josh, Adam, I think we lost you on video. Would love some of your perspectives on this as well, if you wanted to add to that. We might have lost Adam, David and Josh. I'm not sure, but let's peel back something else that Josh, she started this, David, so we got to do it. She brought up strategy, and you're absolutely right, Josh. And I think kudos to Bloomberg. I think Bloomberg did an amazing job talking about some of the data points. I think strategy's all-time high, 400 something, was late last year, which sort of surprised me as I heard it. But they are off something like 60%. David, you'd seen the CEO of Strategy come out recently and say, I'm paraphrasing, you're all making a mistake. But DACOs seem to really be having a problem surviving here. David, what's that perspective for you?
So I think with regard to Strategy, I think what happens is there's like their premium from NAV has just been compressing. And so I think it's down to 1.2 to their Bitcoin holdings. But you also have to remember when Bitcoin was at 120, they had a very significant paper profit. So there was they were worth more. I like to keep them in a different category than the rest of the DACOs.
Just because of size?
Because of size and because I think they're unique strategies to raise money, and I think some of the ideas that they have. Like I think at some point they want to be some sort of lending bank or institution, and being able to lend the Bitcoin that they have and get value from that. I think with the other DACOs, we talked about this. I think that there's still a cohort of people who can't buy Bitcoin through the ETFs or can't buy them through their wealth managers, and we're buying Strategy. As more of these, DACOs came out, there were more options for people. So I think that's on one hand. But on the other hand, just because you have a DACO, you really need someone with financial expertise to know, when to buy. And I think a bunch of these DACOs, got their cash and they immediately, full throttle bought their whole position and didn't layer in. And I think some of those are the ones who may be having to sell right now because they're significantly underwater. And I think the question would be, if you're a DACO, is you're certainly going to need to keep some cash on the sidelines. Otherwise, every time there's a sell-off, you're going to have to sell.
David, I'm going to bring back your old equity macro expertise. It feels like some of them had poor capital allocation models, correct?
Yes, very much so. And I also think that a lot of us thought, I think the general market thought we were going to get to 140, 150 and then have a sell-off. And I think that may have gotten preempted by this sell-off. And also October 10th, which was unforeseen.
Josh, go ahead.
Yeah, I was just going to say, also with that, at least what I've been reading about is outflows from the ETFs. So I guess this does go, I think that supports the idea that you guys were talking about maybe not as many buyers. Although some may say that this is, who knew that we would see Bitcoin below 100 again, right? There were just some articles, just in the past week saying like Bitcoin will never be below 100, right?
Yeah.
So yeah,
It's a,
interesting times.
It's a good point, Josh. And I sort of didn't anticipate the level of ETF outflows, but it really brings us to the one word we've been hearing a lot, David and Josh. Adam, hopefully you're still with us. I don't see you or hear you, but if you can come back, that'll be great. David, Josh, how much of this is the liquidity conversation? Meaning, as we see these outflows, as we see, David, these liquidations and this deleveraging, it seems there's not enough liquidity to empower buyers in this market. And it makes me ask the question, where does the liquidity come from?
So I think we've lost some liquidity from these market makers who are having issues.
Yeah.
I think also retail has not really ever fully come back. And I think that's another place of liquidity. Like they may be on the fringes buying some, the Bitcoin ETF, the Ether ETF, and maybe a couple of the other ones. But I don't know that we've seen real retail coming back in the altcoins or in some of the other parts of the market. And I think that's another area where we're missing the liquidity. But on the plus side, we've had the ETFs have been like a stabilizing bid the last few months too, and the DACOs. So maybe what we're seeing is what a steady state liquidity picture looks like without, constant buying from ETFs and without the support of the DACOs. But, this is like a picture in time. Like I'm very confident things are going to, at some point move higher again. I just think that this has been like a real rebalancing and, maybe ultimately the October 10th issue is still being played out.
Yeah. And it really is about investment horizons. Like Josh, David, the three of us have spoken about that many times. Adam, I'd love to pull you into this segment of the conversation. Good to see you again, buddy. I wanted to talk a little bit about when we look at the price action, from a policy perspective and from a DC perspective, how much time is spent looking at what's going on in the market and saying this is terrible from a perspective of the folks in DC, or maybe this is just the market maturing? Like, how is all of this price action perceived?
Well, I don't think it's positive because obviously there's a lot of liquidations. There's a lot of headlines of billions of dollars being lost and people losing money. I think the only positive would be if we don't see a wave of like companies going bankrupt or any high profile kind of crashes, then yes, it could be seen as a positive of how like resilient the industry is. But I think many of the new, at least the important votes for market structure, some of the newer Democrats that were supported by the crypto lobby and by Fair Shake in the last election, they're pretty well conditioned to the volatility in crypto. So it's not like going to take them out and be odd to them. But what would be is it just gives another quiver to like the critics, the Elizabeth Warrens of the world. But look at this highly volatile asset. We shouldn't be building it in. It poses systemic risk. It brings back all of those concerns when you kind of see like a 30-40% drop in a couple months, which again is not really at all odd for Bitcoin, especially at this point in the halving cycle. It's actually very standard. If you go by the historical Bitcoin trading pattern, and this gets back to a discussion we've had, is does the presence of institutional money fundamentally trade how an asset trades, or just does an asset trade this way and we all should just be along for the ride and expect it? That's kind of where we are. So I don't think it has a huge impact, but wouldn't say it's positive.
Adam, would you have imagined 5 years ago even saying the words, politicians in Washington, some of them are immune to the volatility of crypto? Could you have ever imagined saying that?
No.
David, Josh, I've got to come back to strategy again because it's so pervasively part of the conversations. And Josh, I think you were alluding to some of this as well. And I'm really curious, David, about the market impact here. We're hearing the rumblings of, given the 60% plus, give or take, or fall in the price, we're now looking at the possibility of strategy being removed from certain indices, including MSCI, David, if I recall correctly. There are real downside implications of that. And for everyone in the audience, you may already know this, but David, you and I and Josh and Adam know, get removed from an index, you now have giant portfolios and pensions that have to rebalance in the wake of that security being removed, which is never particularly good for a securities price. David, do you share that concern?
I mean, look, I think one analyst has raised it. I think we need more sort of time and input from other folks before we make some sort of conclusion on that. I don't think it would be helpful for the market if they were excluded, but I don't think just because their stock's been volatile, that they're suddenly going to be excluded from it. So I feel like somebody might have gotten a little ahead of their skis on that, but I think it's something we could certainly pay attention to.
I feel Josh wanting to weigh in.
After she does, I have another point I want to bring in about something.
I'm sorry, Deb.
But go ahead.
So, well, what I was going to say actually wasn't about strategy. So maybe I should hold it, or should I say it?
Let's get David's last point in, Josh, and then we will definitely come back to you. What did I miss, buddy? Sorry.
I want to talk more about Fairshake and, Adam share his kind of view on the role they're playing, because I think it's really important to understand, how they participated in the last election and the force that they are and the implications, for market structure. And Adam, yesterday in our crypto assets working group, you kind of gave us some good insights into that. And I think our audience would appreciate that as well.
Yeah, agreed.
Yeah, so basically the biggest thing to know is that the critical votes for market structure, essentially, there are very reliably, you're probably going to get the entire Republican caucus in Washington, which is about 53 votes. You really need 7 or 8 Democrats to get it over the finish line, to get over the 60-vote filibuster threshold. The good thing working in favor of the crypto industry trying to get market structure is that many of the Democratic votes, at least the ones you need, that critical 7 or 8, come from the freshman class of Democrats that were elected in this most recent election. I'm talking about Alyssa Slotkin in Michigan, Ruben Gallego in Arizona, Alsa Brooks in Maryland. A bunch of them are very supportive of the crypto industry and were supported very heavily by the Fairshake PAC, as David mentioned, which was the biggest spender in the last election. And these legislators have made clear that their goal is to deliver for their constituents and for the industry that backed them and helped get them to Washington. So they are very committed to market structure and to getting a bill. And even Senator Gallego bristled at the suggestion that this was a Republican effort or a partisan effort when the leaked DeFi draft came out. He was essentially furious with the crypto industry. He said, "You're painting this as a partisan exercise. You're saying all Democrats are against you." He's like, "We're fighting for you every day here, and we hate being painted that we're anti-crypto when we're not." And so I think that is going to be pivotal if we're going to get market structure. It will be those newer Democrats that have been very friendly to the crypto industry, that have gotten donations from Fairshake, and they will be the critical votes that could get you over that 60-vote filibuster threshold. And then once you kind of get to that critical mass of it's going to pass, that's when you get the pile-on votes. So you'll get another 10 Democrats that will say, "Oh, it's a risk-free vote now. It's going to pass anyway. Why be on the other side?" And then the ones that'll be left, like with Genius or like the Elizabeth Warrens of the world, that are like, "This is the worst thing in the world."
Adam, thanks. And we'll get to Josh in 2 seconds. Josh, I've got one last question for Adam, so I'm marking on my calendar. Adam, when does the winter recess hit for Congress?
Typically, they call it the Christmas recess. So what you'll see is right before Christmas. There's not, one of the unique things here is there does not need to be a government funding bill at the end of the year because it was pushed into January. So you won't kind of see, they usually call it a Christmas tree bill, where they try to jam every single pet project into the last bill that's going to move. Yeah. You might not see this at this time, but it's basically wherever Christmas falls on the calendar and with the time it'll take them to get home. So it'll probably be December 23rd or something like that. It's basically whenever the senators start smelling those jet fumes, they have a very strong tendency to want to cast the vote, get in the car, get to the airport, and get out of town.
And the reason I ask, Adam, is my family has explained to me, specifically my wife, we better have a quiet Christmas Eve. So I'm hopeful. Josh, I want to come back to you. I know you had a point to raise. I'm sorry we cut you off early.
Oh, you didn't cut me off. I was cutting you guys off. Or not trying to, but yeah. So my point, if it was one, is really to maybe put some positive spin on something, which is, we've seen some price pressure, to say the least, on Bitcoin and ETH. But from what I've been reading, certain altcoin pairs are holding steady. And also, could this be maybe not altcoin season, but maybe as people may, for one reason or another, shy away from Bitcoin or something like that? Could there be beneficiaries in the forms of certain altcoins? So
David, I got to point
throwing it out there.
Josh started the altcoin argument. I guess, David, it's true. If altcoins get cheap enough, someone's going to want to buy them.
I mean, look, we've all been waiting for this altcoin rally, and I think some people are going to look like Joe by the time it actually comes, or at least feel like Joe by the time it actually comes. I still believe that there will be an altcoin rally at some point. I don't believe that all the liquidity of altcoins have gone away, but I do think that, we have to make a case for them. Like, they have to make a case for themselves, and we really need to see more integration into like everyday life. And I think that also leads to getting a tax change on de minimis spending of crypto also. But that's a whole other rabbit hole. But I do feel like at some point the altcoins are going to have to be like, people will see actual tangible reasons and revenue coming from them. I'm not sure when that is, but it needs to come soon, in my opinion.
Yep.
Well, what is the next safe haven in scare quotes? Right? Are people still going to be going to gold? Or like, I know often we've said Bitcoin as digital gold, and hopefully this is just an aberrant blip right now. But if you have your crystal balls out, and by the way, David, I am loving seeing your dog back there. Like that
Yes, honorary WSBA member.
Yes, Amber is an honorary WSBA member. Ron, you're gonna have to get her a little like doggy coat with WSBA.
I will get a WSBA branded dog bowl if you like. Happy to do it.
I will keep it in my in the apartment. Yeah. So, Josh, I think. Why don't you ask me that again, Josh? Now that I'm like laughing at the idea of a WSBA doggy bowl.
So, I mean, again, with the preface that hopefully this is just an aberrant blip, right? And that Bitcoin remains digital gold. If people are looking for some kind of, quote, safe haven or some kind of digital something, what are they going to look at? Is it, everyone moves to gold? Or is there an altcoin out there that might be perceived as having, a golden halo right now? This is not price. Yeah. This is not price recommendations, anyone.
David, you can definitely take that one first, but I do have a theory.
Look, I still think it's going to be gold for quite a while, because I think in some parts of the world, like gold and jewelry is seen as something like people can hold on to, and they know they can get immediate value for if they need it in some type of emergency. And while that's obviously the case in crypto, I just don't think it's sort of gotten down to that level. So I still think gold would be the first option. I just think that as far as crypto goes, I think the more integrated it gets into society, the more likely that's viewed as another hedge. So that would be my take.
I've got a theory, David. I wanted to throw this out there. And Josh, you raised a good point. I don't think, David, that you'll think differently or contradict this theory. But when markets are risk on, Bitcoin is digital gold. When markets are risk off, gold is gold, and that's it. And I think that really is, I don't think there's a safe haven per se in the digital space. I think what we look at is time horizons, Josh, and Bitcoin to me. Look, David, Bitcoin at 85 and change, down 2% on the day. If you got a long enough time horizon, that's a really good price in my mind. But it comes to the use cases as well.
So I agree with you. I think what I would make is a short term versus long term, like you were saying, Ron. If you think the dollar is being debased because we're printing too much money, Bitcoin over time will appreciate more than the dollar has.
Yep.
And you'd be better off being in crypto and Bitcoin than holding dollars. But in the short term, if there were, unfortunately another regional war breakout or some other real black swan event, I think people would still go to regular gold first before going to digital gold.
David, did you notice how elegantly Josh tried to get you and I to predict the next safe haven crypto asset? She's getting very good at asking about crystal balls. It's frightening.
Adam, I mean, you guys have taught me so much. I'm just, playing along here at home, or rather in the doctor's.
I will say this: Joshua is the person who taught me how to say the words Howey test about 10 or 12 years ago. So, payback is fair play, Josh. Adam, let me pull you into this as well. We've only got a few minutes left, but I want to go off script, and I'm sure Josh and David will either love this or hate this. But I saw a news item recently. I'm not sure if you saw it. I believe it was Congressman Warren Davidson who put forward a proposed draft legislation for a strategic Bitcoin reserve or some level of strategic reserve. Adam, have you seen this, and kind of what are your thoughts?
Well, it's interesting. So we saw some of these versions in kind of my previous position. We saw some of these versions when the administration first came in. Senator Loomis was pushing a version of her kind of Bitcoin strategic stockpile. And the Trump administration somewhat picked that up and basically said that they weren't going to liquidate or sell current U.S. government Bitcoin holdings. And those Bitcoin holdings actually went up significantly because there was a massive DOJ seizure post that announcement, which I think was like the largest ever. And they brought in a couple billion more Bitcoin onto the U.S. balance sheet. But one thing that the Trump administration did establish was the digital asset stockpile, which is similar to kind of the strategic reserve, but can also encompass other assets, and basically is just putting forward the position that the U.S. government's not going to sell these assets or liquidate them, which could be negative to the price in the market, but also accretive to the U.S. government. The Lummis bill was a little different than the Davidson bill, as I understand, because she wanted to remark our gold reserves.
Yep.
So basically our gold reserves, the last time we reevaluated them, gold was like worth $100 a bar, and obviously now it's worth $4,000 a bar. So if you revalued them and put up the price of gold, you could technically have a huge financial windfall and then use that to buy Bitcoin. That is the Lummis formulation. I imagine the Davidson formulation is slightly different, but that's how I understand it. As to whether or not it has a great chance of passing, I'm slightly skeptical. I think let's focus on get market structure first. We got Genius, and then if we can get a Bitcoin strategic reserve after that, great. But I think the government holding Bitcoin is a better position than the government previously when it would sell into the market and cause price pressure.
Adam, I've got to do it. Trivial Pursuit segue a bit. Doesn't the Federal Reserve hold more gold than any other entity in the world? Is that true?
That is the understanding. Obviously, there are conspiracy theories that gold might not actually be there. But yes, if you believe the current government accounting, I believe they're the largest holder of gold in the world. And obviously, that gold bullion is meant to back the US dollar and actually kind of have it tracing to what the dollar would be worth. And obviously, those gold reserves have appreciated massively, so are likely actually worth more than all the dollars in circulation. Again, assuming the conspiracy theories are not true and the gold's at Fort Knox and it's there.
Adam, I appreciate your patience as I put my Trivial Pursuit hat on. Sorry about that, buddy. David, Josh, we've got to come back to, we're going to be taking next week off post-Thanksgiving, I believe. Some of us are traveling and family have said stop broadcasting so much. But Josh, David, I want to talk a little bit about what the future looks like. And David, I've got some predictions or thoughts. Adam would love your perspectives on this as well. David, I brought this up, I think, at yesterday's meeting. 2026 is going to have new dynamics that you and I have been talking about for a long time. One of them is wirehouses. As we begin to see some of these who I think have publicly pledged to be making crypto available to their customers as of 2026. Is that one of the catalysts to a good 2026, David, or do we still need a sorting out of liquidity and deleveraging?
I think we're going to have a sorting out of the liquidity and deleveraging from then. So I do think it is a catalyst, and I think that, there's a lot of trapped money, I would say, right now, where people would like to have some allocation and they can't.
Yeah.
If we really see 401k plans having crypto in them, that's a huge unlock. And so I think, one, the wirehouse is a big unlock, but two, also if retirement plans would be a massive unlock. Because I think a lot of, depending on who the people are, a lot of people's holdings of securities or, those type of assets are really in their retirement accounts. So I think that would be a really big unlock. So I think we're going to see more liquidity in 26. I would love to have like a broader conversation about this, and maybe we, have an X Spaces about this, but like, what will move altcoins in 2026? What needs to happen for liquidity to come into that space?
Josh, he will not let go of the altcoins conversation. He's been holding on to that for a while. And I think we lost Josh. Shout out to Greg Murphy putting in the commentary. U.S. holds over 8,000 tons, 261,000 ounces. This is what I get for asking the trivia question, Adam. Greg, buddy, thanks so much. Really good point. We've only got a couple of minutes left. David, Adam, closing comments from both of you. I mean, it's been a pretty chaotic week. And when I look at the year-to-date, David, I'm still sort of surprised. Solana down over 30, BTC year-to-date down 9. I think we've got Josh back. Hey there,
I'm
Josh.
back. My computer died. It ran out of batteries.
Ron, I can probably give my last comment just because I probably have to run. But
yeah, go for
what
it.
I will say is there's been a lot of volatility. All I would say is kind of for all of us veterans here, this is the asset class we work with. It's the most volatile asset class there is, at least as it's so far. Clearly, the institutional money being brought to it hasn't changed the overall volatility profile of the asset as we're seeing in the market. But I don't think that's fatal. It's just a feature of the asset. And while there may not be catalysts today, one of the reasons the market's rallying is because the Fed, a lot of this sell-off is Fed related with the cut being priced out. If that cut actually comes in December, that could be helpful. And as we noted, if they can get a market structure bill in December, that could be hugely beneficial, not just to the price, but just for all of us operating in the space to have clear rules of the road, which is what we've been asking for over a decade now. So I am still very hopeful. I know when we had our summit, I was the only one predicting that it would pass. So I'll again
on the panel. I remember that.
I'll again hope that my rosy predictions in the past, they've been good, but I'll leave it there. But it was a pleasure joining you guys. Thanks so much for today.
Adam, good to see you, buddy. Thanks. We'll do more conversations. Really appreciate your thought leadership. Have a great weekend.
Bye.
Josh, David, before we sign off, Josh, what a trooper, pulling out every electronic device to come back on the show. David, Josh, I just want to talk about, I guess, Josh, what are your closing comments on some of the things that you've been seeing? And what does the next week look like for you?
So the next week, I mean, certainly a lot of work to do, but I'm also really thankful for everything this year, including for you guys. And also for, health and family stuff, which, knock on wood. But yeah, I mean, one of the things I just wanted to touch upon, and I guess this is I don't know if this is a closing thing to say, but it's just something I wanted to mention, which is, when we talk about what you guys were talking about right before my computer died, right, about what we need to see. One of the things that I didn't really wasn't thrilled about was an article that described the auto liquidations as a software glitch. And I think when we think about the wirehouses coming online and, what's going to happen and is retail going to be back in and all this sort of things, we need to get to a point where either we're fixing software glitches,
right,
or we're saying this is a feature, not a bug. Right. And we're not calling it a software glitch. We're saying caveat emptor, right?
Yep.
So that's my thought. But overall, I am hopeful about, I will take Adam's view, his hopefulness, his positivity. I will carry it through. If he's positive, I'm positive.
Yep.
And, but what about you guys? What are you guys doing next week?
I'm with you long term. I'm very positive. It might be a little bumpy between now and then. David, Josh alludes to something else that you and I were talking about. It'll probably be some of my research over the weekend, but does the crypto market long term need circuit breakers? That's what I'm thinking about. And by the way, I'm planning for the holiday party, which also involves ordering food and drink, Josh. But David, go ahead, buddy.
So I think there's some really interesting questions, but I do want to say one thing. I know that I have definitely been critical of the legislative process regarding crypto in the past and critical of a certain party in the past. And I do want to say that from people I know on the Hill and people like Adam, that it really does feel like there's a cohort who's making a really good faith effort to get this bill passed and sees the importance of it. And so I want to be firstly thankful for them to making the effort, and to Fair Shake for really helping realign some of the political parties, constituents, to be supportive of crypto. But more importantly, I'm thankful for the both of you, our listeners, and our WSBA community. And look, I think this has been a great year for crypto. I mean, fine, the price may not be where we want it to be at the end of the year, but I feel like we've made a lot of progress. And I think the kind of projects that Josh and I are working on are things that we wouldn't have been able to do a year or two ago.
Yeah.
And, you know, clients who you are seeing and we're going to be members. So I'm very thankful for all that. I will be as all-American as possible for this Thanksgiving. I will be watching football for 8 hours. I'll be going to a barbecue.
Shocker.
And then I'll be watching my Michigan Wolverines beat Ohio State next week from Saturday. So I will be all in on all the traditional things we do for Thanksgiving and really enjoying and supporting that with my family.
David, Josh, love you guys. Appreciate all you do for the WSBA. It's great to work with you. For all of our members out there, thank you so much for being a part of this. Next Friday, I will be recovering from Thanksgiving at my sister's. She overcooks every single year. Wishing you both a very wonderful Thanksgiving. For everyone who watched, if you had additional questions for Josh or David or I, please email us info@wsba.co. We'll leave it there, and we will see you next time. Take care, everyone. Bye-bye.